adding $4.50 to $116.80 US a tonne. Let's get some more on all of this. Evan Lucas joining us from IG in Melbourne now. Evan, yeah, the moves in the iron ore price there, really interesting, and retracing the March losses. And just on some other commodities, gold, you know, we had a guest on earlier thinking that maybe the bottom is coming soon. What do you think of these moves in commodity prices?
Yeah, I'll probably take the last question first. Gold does look like it may start to find that support. So it's currently sitting at $12.82 per ounce US at the moment, and we saw when it did sort of have that support level at the end of December last year. That was about where it got to. So we are watching that level quite closely. It's around about on the 50% retracement line from the top to bottom from what we saw. So that was around about 11.82, I think it was, to around about 13.60. So we are right in the middle of that 50% band. Again, it's a very interesting sort of place for gold to be, and the more and more this week progresses, the more and more it will probably be fundamentals that may actually move gold around. We are watching particularly on Friday non-farm payrolls, although trading data at the moment is a bit tough to do. We're more watching what central banks and what their talk is rather than actual data, but that's what I'd be watching on gold. Moving back to the other part of the question, iron ore, very, very interesting. So the Dalian futures, which are now becoming a very, very good metric to actually see future trading with regards to how the spot price may come out at the end of the day, because that is actual physical contracts being traded, and that's the average price that they give you. That was up 2.6% from Friday's close till last night, and then we saw last night the biggest intraday move we've seen since August's recovery last year, up $4.50 as you alluded to. So it's at 116.80, that's 10 cents off that retracement. That could be the stimulus that everybody is talking about with regards to China. If we are going to see it, it is going to be those predetermined pre-assets, which will mean, you know, you see work, preparation work, construction work being brought forward, therefore infrastructure being brought forward, and there, if you're going to do that, you need steel, and therefore the forward idea of steel is obviously iron ore. So we may actually be seeing Chinese stimulation measures starting to come through in the spot prices, and that's what I'm making out of it. You can see it also, copper is stabilising, starting to tick up ever so slightly. All of that feeds into the idea that China is moving, and that's why today's PMI figure will be very, very interesting. I think despite whatever you get, an expansion or a contraction, it'll give the market an excuse to say stimulus is coming. If it's a contraction, it's obvious call, you know, it's moving slower, they want domestic demand to increase, there it is. If it's an expansion, the estimate is currently sitting at 50.3. That's such a small expansion that they'll say on their current metrics on how, you know, we've seen output where GDP is forecasted to be, that's not big enough to actually drive their current economy. So all of that is why I think the numbers coming at 12.45 today will be all about stimulus, and I think you're starting to see that in the commodities that we've seen this morning.
Just in terms of, you know, the ASX 200, how you think it's going to open today? Of course, we've also got the RBA looming as well there. What do you think we'll see at the open?
Yeah, I think it's going to be a little bit lax. I mean, we saw a really interesting close. There was around about a 12-point drop at the close. Now, I think that's quarterly finishes. There was certainly a rumour out there was a very, very big hedge fund closing off a lot of positions in the close, and there was a huge volume that went through. So that may be sort of filtering out today. It looks like we're going to actually hold where we are. So around about 53.95, and I think that's probably where we'll sit for most of the day. A lot of hedge managers will be having to sort of close their books and doing a lot of the administration work rather than trading. But also to be aware, there is 23 individual companies putting out PMI data today. There's also around about 7 countries that are looking to inflation data as well. So there's so much material in there today that it will be a very, very interesting trading day. Being the first of the month, also it could be a bit of an April Fool idea that there could be some very, very strange and interesting moves as all that data starts to filter out. Watching those currencies, particularly as you alluded to, RBA today and therefore the Aussie dollar, we are now at almost 5-month highs, and it looks like it's not going to slow down anytime soon. And I think the statement this afternoon will be, again, more about housing and the fact that low rates have been supportive than anything to do with the Aussie dollar, and that could see it move towards 92.9, even maybe 93 cents, and that would be an amazing thing to see, considering where the Aussie dollar was around about, what, 6 weeks ago before all of this sort of came about.
Yeah, it has been some big moves. We're up 4% for the first quarter. Thank you so much for that, Evan. We'll chat to you through the trading day.
Thanks, Brady.
Evan Lucas there from IG in Melbourne.